Question 1. With the advent of increased demand for energy-efficient retrofits, Mr. Thompson, the CFO of Cool Air Solutions, is evaluating two mutually exclusive investment options: replacing an aging rooftop unit with a high-efficiency model or installing a solar-assisted HVAC system. The high-efficiency unit has a lower initial cost but limited energy savings, while the solar-assisted system has a high upfront cost but significantly higher long savings. Both projects have similar lifespans. Which financial metric should Mr. Thompson rely on primarily to select the more advantageous project? A. Payback period. B. Internal rate of return. C. Accounting rate of return. D. Net present value NP. Answer. Correct answer. D. Net present value NPV. Explanation. NPV accounts for the time value of money and cash flows over the project's life, making it superior for comparing projects with different cost-saving profiles. Unlike which can be misleading with non-conventional cash flows or payback period, and which ignore value beyond cut-off period or rely on accounting figures. NPV gives clear picture of net financial gain. Other principles in capital budgeting theory and recommended by the CA and CFA curricula. NPV is the preferred method for evaluating mutually exclusive projects in HVACR capital planning. Question 2. To illustrate this point, consider Greentech HVAC Services, which signs a 6-month service contract with a commercial client. The contract includes scheduled quarterly maintenance and on-demand emergency service visits. The full payment is made upfront. Under GOP, when should Greentech recognize the revenue? A. Entire revenue at contract signing. B. Only after the final service is delivered. C. Proportionally as services are performed. D. Upon the client's written satisfaction of work. Answer. Correct answer. C. Proportionally as services are performed. Explanation. According to Ask 606 under GOP, revenue should be recognized when performance obligations are satisfied. Greentech must allocate revenue over the contract period based on the services rendered. Recognizing all revenue upfront A, or delaying until final delivery B, misrepresents financials. Client satisfaction D is not a recognized trigger under unless it's contractually the performance obligation. This aligns with GOP revenue recognition principles for service-based contracts. Question 3. In contrast to traditional retail businesses, HVACR firms often face uneven cash inflows due to seasonal demand and delayed receivables from large projects. What is the most effective strategy an HVACR financial manager can use to optimize working capital in such an environment? A. Maintain excess inventory during slow months. B. Negotiate longer payment terms with suppliers. C. Shorten customer credit periods aggressively. D. Secure long-term loans for operating needs. Answer. Correct answer. B. Negotiate longer payment terms with suppliers. Explanation. Extending payables improves liquidity without increasing debt, allowing better cash flow management in a cyclical industry. And maintaining inventory A. Ties up capital. Aggressively shortening credit C. Can harm customer relations. Long-term loans D. Should fund capital expenditures, not operating cash gaps. This approach aligns with best practices in working optimization as outlined in Financial Operations Management Standards. Question 4. From a practical standpoint, Patel oversees HVAC multi-year service contracts with municipal buildings. One contract includes performance incentives tied to reduced energy consumption. How should these incentives be handled in financial projections? A. Recognize incentive revenue at contract signing. B. Exclude incentives from projections due to uncertainty. C. Include incentives only when energy reduction targets are met. D. Estimate and recognize incentive revenue evenly over the contract. Answer. Correct answer. C. Include incentives only when energy reduction targets are met. Explanation. Incentive revenue is a variable component contingent on performance. Under Ask 606, such revenue should be recognized when it is probable and estimable, typically when targets are met. Recognizing early and violates revenue recognition rules. Exclusion B. Understates future value. This principle is essential in service contract financial management and aligns with GOP variable consideration guidelines. Question 5. Considering the evidence, which depreciation method would most accurately reflect the usage pattern of a high-mileage HVAC service fleet used extensively during peak summer seasons? A. Straight line method. B. Sum of the year's digits method. C. Double declining balance method. Answer. Correct answer, D. Units of production method. Explanation. This method matches depreciation to actual asset usage, ideal for vehicles with variable seasonal workloads. Straight line A ignores usage intensity. Accelerated methods BC front load expense but don't match usage directly. ERS and GOP allow units of production when usage is key cost driver, recommended in FASPASC 36010 for assets where output use correlates to economic benefit. Question 6. The correlation between value-based pricing and HVACR service profitability has become evident in competitive markets. Which pricing strategy most effectively maximizes long-term profitability without undercutting perceived service value? A. Cost-plus pricing. B. Penetration pricing. C. Value-based pricing. D. Discount bundling. Answer. Correct answer, C. Value-based pricing. Explanation. Value-based pricing aligns price with customer perceived benefits rather than cost. This strategy supports brand value and profitability. Cost plus A ignores market demand. Penetration B may attract price-sensitive clients but erodes margins. Discount bundling D can obscure value perception, supported by Porter's competitive strategy and used widely in HVACR differentiation model. Question 7. Examining the consequences of Mr. Hernandez, owner of Efficient Climate Solutions, decides to convert his HVACR firm from a sole proprietorship to an S corporation. What is a primary tax benefit of this transition? A. Ability to deduct personal medical expenses. B. Elimination of payroll tax obligations. C. Avoidance of double taxation on business profits. D. Exemption from quarterly estimated tax payments. Answer. Correct answer, C. Avoidance of double taxation on business profits. Explanation. S corporations are pass-through entities allowing profits to be taxed only at the shareholder level. This avoids the double taxation typical of C corporations. Deducting personal expenses A is limited. Payroll taxes B still apply to salaries. Quarterly tax D remains mandatory. RA regulations under subchapter S of the Internal Revenue Code guide this treatment. Question 8. Throughout the course of managing HVAC service operations, Kim reviews fleet data showing rising fuel and maintenance costs. Which analytical method should he use to determine per service vehicle cost efficiency? A. Fixed cost allocation. B. Activity-based costing. ABC. C. Time-driven costing. D. Job order costing. Answer. Correct answer. B. Activity-based costing. ABC. Explanation. ABC assigns indirect costs, fuel, maintenance, to services based on actual usage drivers, mileage, service hours. This reveals inefficiencies across vehicles and jobs. Fixed allocation A oversimplifies. Time-driven C focuses on labor. Job costing D is more appropriate for installation work. ABC endorsed by SEMA and HVACR fleet cost optimization frameworks. Question 9. The impact of implementing HVAC-specific financial software can be profound. Which key benefit justifies the investment in an integrated ERP system for an HVACR company? A. Enhances technician training records. B. Automates depreciation calculation. C. Synchronizes financial data with project operations. D. Prevents tax audits. Answer. Correct answer. C. Synchronizes financial data with project operations. Explanation. ERP systems integrate finance, inventory, procurement, and job tracking, offering real-time insights and better financial control. Technician training A is HR-related. Depreciation B can be done by simpler tools. No system D prevents audits. ERP value is documented by NACF and HVACR case studies from SMACNA. Question 10. By evaluating refrigerant phase-out policies, is Sanders, CFO at Arctis HVAC, anticipates significant cost implications tied to R400 TINA restrictions. Which financial planning response is most appropriate? A. Stop whole phased-out refrigerants. B. Reduce technician training to cut costs. C. Increase capital reserves for retrofit investments. D. Eliminate maintenance contracts involving legacy systems. Answer. Correct answer. C. Increase capital reserves for retrofit investments. Explanation. Environmental compliance will demand capital for new systems. Stockpiling A. May violate EPA rules. Cutting training B. Risks liability. Dropping contracts D. Reduces revenue. EPA regulations under Section 608 and ASHRAE 15 compliance require HVACR firms to prepare financially for refrigerant transitions. Question 11. In light of recent developments, is Douglas, financial controller of Arctic Breeze Systems, observed a significant uptick in accounts receivable and decline in cash reserves despite stable profit margins. The company's income statement shows increasing net income quarter over quarter. What is the most likely financial risk this trend indicates? A. Undervalued inventory. B. Overstated liabilities. C. Deteriorating liquidity. D. Underreported revenue. Answer. Correct answer. C. Deteriorating liquidity. Explanation. Increasing net income with simultaneous cash flow decline suggests that profits are not being converted into cash, often due to delayed collections or poor working capital management. This poses a liquidity risk impairing operations. Inventory or liability misstatements AB would affect asset or debt valuation, not necessarily cash flow. Underreported revenue D would reduce net income. This concept is central to financial statement analysis and emphasized in GAAP and IFRS cash flow reporting standards. Question 12. Through the lens of profitability forecasting, Coalpoint HVAC Inc. is launching a new ductless mini-split product line. The unit cost is $1,200, the variable cost is $700, and fixed overhead costs are projected at $250,000. What is the break-even point in units? A. 625 units. B. 500 units. C. 400 units. D. 1,000 units. Answer. Correct answer. A. 625 units. Explanation. Break-even point equals fixed cost equals Elling price. Variable cost equals $250,000, $1,200. $700 equals 625 units. This calculation helps determine the sales volume required to cover all fixed and variable costs before generating profit. Understanding break-even analysis is essential for HVACR managers when planning pricing and capacity. This method is widely applied in cost-volume profit analysis per managerial accounting standards. Question 13. The traditional approach to cost accounting at Thermogrid HVAC allocates overhead evenly across all service calls regardless of job type. This has led to distorted job costing and pricing inefficiencies. Which method would provide more accurate overhead allocation? A. Direct labor hours allocation. B. Percentage of total sales. C. Activity-based costing. D. Fixed per unit charge. Answer. Correct answer. C. Activity-based costing. Explanation. ABC allocates costs based on actual resource consumption. E.g. dispatching time, technician hours, reflecting operational realities. More precisely, flat methods. A. B. D. Misallocate overhead in diverse job environments. ABC is recommended in cost accounting standards CMA, and is increasingly adopted by HVAC firms to improve pricing accuracy, profitability tracking. Question 14. Focusing specifically on compliance, ISTA-RAISE is preparing financial documentation for regulatory review under state environmental and labor oversight bodies. Which of the following reports is most critical to demonstrate adherence to multi-agency requirements? A. General Ledger Detail Report. B. Adjusted Trial Balance. C. Compliance Assurance Report. D. Integrated Financial Disclosure Package. Answer. Correct answer. D. Integrated Financial Disclosure Package. Explanation. This package compiles financial, environmental, and labor-related data in a standardized format that meets both financial and compliance disclosure needs, while the General Ledger and Trial Balance app are internal and raw, and a Compliance Assurance Report C is vague or not standardized. Integrated packages are used per Sarbanes-Oxley Act and EPU-shares protocols in multi-regulatory environments. Question 15. In what ways can a payroll system tailored for HVACR field technicians improve financial accuracy? A. It automatically allocates hours to nearest job site region. B. It separates vacation from sick pay in labor reporting. C. It enables cost per job labor burden tracking. D. It aggregates all pay under a single general account. Answer. Correct answer. C. It enables cost per job labor burden tracking. Explanation. Accurate assignment of payroll costs, wages, benefits, taxes to specific jobs is vital for determining job profitability. Generic aggregation D hides cost detail. Regional allocation A helps logistics but not financial tracking. Sick versus vacation B matters for HR, not financial accuracy. This concept is vital under job practices and FAST guidance on expense recognition for field-based industries. Question 16. When faced with uncertain market conditions, is NG financial analyst at Climate Logic HVAC uses data analytics to project cash flow variability across 4 service zones. What technique would most effectively guide her scenario modeling? A. Linear regression of seasonal revenue. B. Fixed budget variance analysis. C. Monte Carlo simulation. D. GOP cash flow projection worksheet. Answer. Correct answer. C. Monte Carlo simulation. Explanation. Monte Carlo simulations model a wide range of possible outcomes using probability distributions ideal for understanding risks and cash variability. Linear regression A shows trends but lacks probabilistic depth. Budget variance B is retrospective. GOP worksheets D don't support probabilistic forecasting. This method is recommended in advanced analytics and C decision support systems. Question 17. From multiple perspectives, how does using first in, first out FIFO inventory valuation affect financial results during periods of rising material costs for HVACR parts? A. Overstates cost of goods sold. B. Reflects true replacement cost. C. Overstates ending inventory value. D. Understates gross profit. Answer. Correct answer. C. Overstates ending inventory value. Explanation. FIFO assumes older, cheaper items are sold first, leaving higher cost items in inventory, thus inflating ending inventory during inflation. COGS is lower and gross profit is higher. LIFO, not allowed under IFRS, would result in opposite effects. FIFO is permitted under both GOP and IFRS and is commonly used in HVACR firms for stable inventory accounting. Question 18. Taking into account diverse HVACR project types, which job costing method is best for tracking profitability on large commercial installation projects? A. Standard costing. B. Activity-based costing. C. Process costing. D. Job order costing. Answer. Correct answer. D. Job order costing. Explanation. Job order costing assigns costs directly to individual projects, which is ideal for complex and customized commercial installations. Standard A. And process costing C. Suit mass production. ABC. B. Helps with overhead, but not lab or material tracking per job. This method aligns with cost accounting standards for project-based industries as recommended by HVACR and construction accounting guidelines. Question 19. Historically speaking, Esteban's installs a commercial HVAC system, but the client defaults on the final payment. Which financial action should be prioritized to protect recovery rights? A. File a small claims court complaint. B. Issue a final invoice with late fees. C. Initiate a mechanics lien before the deadline. D. Hire collection agency immediately. Answer. Correct answer. C. Initiate a mechanics lien before the deadline. Explanation. Mechanics liens secure the right to payment through legal claim against the property where the work was performed. Timing is critical and governed by state lien laws. Other actions A, B, D may follow but do not offer the same legal leverage. Understanding lien laws is essential for HVACR financial managers to manage receivables risk. Question 20. The emerging pattern of digital transformation in HVACR finance has led to wide adoption of cloud-based platforms. What is the greatest financial advantage of using cloud-based systems for mid-sized HVACR companies? A. Elimination of software licensing costs. B. On-demand scaling of financial data capacity. C. Reduced payroll costs through automation. D. Improved HVACR technician dispatch speed. Answer. Correct answer. B. On-demand scaling of financial data capacity. Explanation. Cloud systems allow real-time access, scalability, and reduced upfront infrastructure costs. Licensing. A. Still exists. Payroll automation. C. Is beneficial but secondary. Dispatch. D. Is operational, not financial. Financial scalability is a key benefit cited in cloud accounting research and by firms such as Intuit, Oracle NetSuite, and Sage Intacct. Question 21. From a historical standpoint, Ista Ramaya's financial planning manager at Northwind Mechanical is developing a budget for the upcoming fiscal year. He uses the prior year's actual expenditures and adjusts line items based on projected inflation, new service contracts, and seasonal labor shifts. This budgeting method offers familiarity but has led to repetitive overspending in certain areas like emergency overtime. What technique is Ista Ramaya's and what alternative method might yield greater precision and accountability? A. Zero-based budgeting. A recommended alternative is static budgeting. B. Rolling forecasting. A recommended alternative is activity-based budgeting. C. Incremental budgeting. A recommended alternative is zero-based budgeting. D. Scenario planning. A recommended alternative is top-down budgeting. Answer. Correct answer. C. Incremental budgeting. A recommended alternative is zero-based budgeting. Explanation. Ista Ramaya's is applying incremental budgeting, adjusting prior actuals. This method often perpetuates inefficiencies. Zero-based budgeting starts from zero, requiring justification for all costs, enhancing scrutiny. Scenario planning. D. Involves contingency building, not budgeting directly. These practices are detailed in SEMA's frameworks and GOP internal controls for planning accuracy. Question 22. When evaluating the merits of a multi-state HVAC installation contract, Lindstrom realizes that each state applies different rules regarding sales tax on labor and equipment. For instance, state A exempts labor but taxes materials, a state B taxes both. What is the most critical financial control to apply to maintain tax compliance and avoid penalties? A. Use a unified sales tax rate for nationwide billing. B. Apply tax based on the HVAC company's home state. C. Determine nexus and apply tax based on job site location. D. Defer tax collection until the project is completed. Answer. Correct answer. C. Determine nexus and apply tax based on job site location. Explanation. Taxation is based on nexus, economic or physical presence, and the jurisdiction of service delivery. Multi-state operations must apply the correct rates per project location, not company headquarters. B. Unified tax rates. A. May result in under or over collection, deferring tax. D. Risks late payment penalties. This approach aligns state sales tax laws and streamlined sales and use tax agreement guidance. Question 23. Under the assumption that a new client contract includes installation of refrigerant-based systems in a high-risk industrial zone, Ista Hargrove, the financial risk officer, must assess potential financial exposure. What strategy offers the most comprehensive financial protection? A. Self-insure for all liabilities and build internal reserves. B. Shift risk by purchasing specific project-based insurance. C. Avoid the project to eliminate risk entirely. D. Accept the risk and absorb losses into general overhead. Answer. Correct answer. B. Shift risk by purchasing specific project-based insurance. Explanation. Risk transfer via tailored insurance. E. G. Liability, pollution, or professional indemnity provides measurable protection against project-specific hazards. Self-insurance. A. Lacks scalability. Avoidance. C. Limits business opportunity. Absorbing losses. D. Is financially imprudent. This aligns with COSO guidelines and insurance best practices. Financial managers in high-risk environments. Question 24. The fundamental question is, how should an HVACR firm categorize the purchase of replacement compressors for internal training use? These units are never installed at customer sites but used solely for staff skill development in a lab environment. A. Cost of goods sold COGS. B. Training expense. C. Equipment inventory. D. Capital asset. Answer. Correct answer. B. Training expense. Explanation. Since the compressors are not sold or installed and provide value only through internal use, they are considered a training expense. Inventory. C. Applies to resale. Capital assets. D. Must meet depreciation thresholds and long-term operational use. not training modules. This categorization aligns with HVACR-specific chart of accounts under GOT material cost classification standards. Question 25. In a modern context of service convenience, Mr. Nielsen, CFO of a Precision Climate Services, implements mobile payment options for field technicians to collect payments on site. Which primary financial control must be implemented to ensure data security and prevent fraud? A. Real-time HVAC reconciliation. A. ECESS-compliant encryption of transactions. C. GPS-based technician payroll authorization. D. Blockchain ledger posting of all payments. Answer. Correct answer, ECESS-compliant encryption of transactions. Explanation. Payment card industry data security standards ECESS require encryption, authentication, and secure transmission of card data. Its reconciliation A ensures accuracy but not security. GPS-based payroll C is unrelated. Blockchain D is emerging but not yet standardized for mobile HVAC transactions. Compliance is regulated. PCI Security Standards Council mandates. Question 26. Based on the information Mr. Carter enters, a contract with a general contractor to install HVAC units in a multi-tenant building. The contract includes a clause stating payment contingent upon receipt of funds from the owner. When the general contractor is not paid by the owner, Mr. Carter receives nothing. What clause is this and what is its enforceability? A. Pay when paid. Generally enforceable. B. Pay if paid. Enforceability varies by state. C. Hold harmless clause. Always enforceable. D. Force majeure enforceable in all cases. Answer. Correct answer. B. Pay if paid. Enforceability varies by state. Explanation. Pay if paid shifts risk from GC to subcontractor but is unenforceable in many jurisdictions if it violates public policy or lacks clear language. Pay when paid only delays timing, not obligation. Hold harmless and force majeure address different legal issues. Refer to our contract documents and state-specific construction law for enforceability standards. Question 27. While examining supplier performances, Doyle identifies inconsistent delivery times and price fluctuations on frequently used copper piping. What strategy best stabilizes supply cost and availability? A. Switch to a lowest cost supplier each month. B. Use spot buying during off-peak seasons. C. Negotiate a long-term supply contract. D. Increase safety stock permanently. Answer. Correct answer. C. Negotiate a long-term supply contract. Explanation. Long-term agreements provide price stability, supply assurance, and strengthen vendor relations. Spot buying. B. Is unpredictable. Lowest cost selection. A. Ignores reliability. Safety stock. D. Increases carrying cost. This method supports strategic procurement practices and HVACR vendor risk management as recommended by ISM Institute for Supply Management. Question 20. Contrary to popular belief, general liability insurance does not protect HVACR companies from all potential losses. What type of policy is required to cover design flaws in a system improperly sized by the firm's engineer? A. Product liability insurance. B. Workers' compensation. C. Builders' risk insurance. D. Professional liability insurance. Answer. Correct answer. D. Professional liability insurance. Explanation. Professional liability (EO) covers negligence in design, specifications, or consultations. Key for HVAC engineers and consultants. Product liability A covers defective equipment. Workers' comp. B covers employee injury. Builder's risk C applies to property damage during construction. This is mandated by state professional licensing boards and insurance underwriters. Design professional. Question 29. By comparing cash flow patterns during peak and off-season months, Leclerc notices that despite profitability, a company struggles to meet payroll in off-seasons. What is the most financially sound solution? A. Delay payments to suppliers during off-season. B. Secure a revolving line of credit for seasonal gaps. C. Reduce technician workforce during off-peak months. D. Offer discounts to customers for advance payments. Answer. Correct answer. B. Secure a revolving line of credit for seasonal gaps. Explanation. A revolving credit line provides liquidity without permanent debt. Delaying payables. A. Harms relationships. Reducing workforce. C. May impair service. Advance payment discounts. D. Could erode margins. Cash flow smoothing is critical for operating cycle guidance and SBA recommendations for seasonal businesses. Question 30. The general consensus is HVACR firms benefit from ERM finance integration. Which of the following benefits has the strongest direct impact on cash flow predictability? A. Automated technician dispatch routing. B. Real-time proposal to payment visibility. C. Time tracking for maintenance crews. D. Centralized vendor contact lists. Answer. Correct answer. B. Real-time proposal to payment visibility. Explanation. Integrating ERM with finance systems enables end-to-end visibility from sales proposals to collections, improving forecasting and R-cycle management. Dispatch A and time tracking C are operational. Vendor lists D relate to procurement. Real-time cash cycle visibility is emphasized in ERM integration frameworks per NetSuite and Salesforce Finance Services Cloud guidelines.